What do you think we're going to see in terms of the pound this year, Karen? I mean, if we've got all that stimulus coming, do we see the pound as a result weaken, or do you think it's still got more room to run higher?
Eventually is my answer to that one. I do think we're probably going to see a little bit more saber rattling, a little bit more concern about how the Brexit negotiations are continuing as we get towards mid-year, for example, and that maybe put a little bit of downward pressure near term as talk of hard Brexit intensifies. But ultimately, I think we won't see a hard Brexit. We have seen pragmatism at the midnight hour throughout the last 3 years, and therefore I think as we go into next year, whether that's because the deal has been agreed in some skeleton form or there's been an extension, the pound should be higher into next year, but it could be volatile in between.
So, because we spoke to NatWest Markets earlier on, Ross Walker from there, Karen, and he was saying there's arguments for a cut today and also in May. Why is there such different opinion, do you think, on the extent to which we need to see rate cuts from the Bank of England right now? Well,
I think it boils down to that framework that I talked you through, and I think there's a bit of a disagreement on whether there is an output gap in the UK. Some may be feeling that there could be more scope for growth, more scope for demand, and maybe also more pessimism on the global backdrop and how the economy copes through this ongoing Brexit uncertainty. And maybe I'm a little bit more optimistic. And as I say, I really think this fiscal stimulus is going to have significant impact. We're at a multi-decade low on employment, and the government's on a hiring spree. That's going to have an impact on wages and inflation.
And does the Bank of England have the leeway to wait for that, I suppose? It's a known unknown. We know it's coming, but we don't know exactly the size of it.
We don't, absolutely. But I think, Mr. Vliga and Mark Carney both said that any action today was conditional on, because the data in December were very weak, but was conditional on not seeing any recovery. We have seen a bounce in many of the business surveys, and that does suggest that the epicenter of fear that we were in December has relieved somewhat. And so I think there is time. There's no imminent pressure.